$4 to $8 billion. That is how much Standard Chartered, one of the largest banks in the world, says will flow into XRP exchange-traded funds in the first year after one piece of legislation gets signed into law. One bill, one Senate vote, targeted for the week of July 20th. And if it fails? Senator Cynthia Lummis says the next realistic window is 2030. Not next year. 2030? That is a 4-year difference, riding on a single vote that is essentially a coin flip right now. Before we go any further, nothing I say on this channel is financial advice. I am not a financial advisor. Do your own research. I am Tony. And today we are breaking down the Clarity Act, what it does, what happens if it passes, what happens if it does not, and why every single asset in your portfolio could look very different by the end of this month. Let's get into it. Before the deep dive, let us run through where the market actually stood heading into today. The good. The S&P 500 closed up 0.38% at 7,543. The Nasdaq advanced 0.9% to 26,107. And the semiconductor sector, which had been getting punished, bounced back 2.5% after June inflation data came in softer than expected. The single most important number from the last 48 hours that nobody is talking about loudly enough. Bitcoin spot exchange-traded funds just snapped a 10-day losing streak. $221 million in a single day, the largest daily inflow in 2 months. That is the first real institutional re-entry signal we have seen since this sell-off started. Keep that in the back of your mind. We will come back to it. And if you are trading crypto through all of this, make sure you are doing it on a trusted platform. I use Kraken, link is in the description. The bad. Bitcoin is still pinned around $63,000, down about 2%. The Fear and Greed Index is sitting at 22. That is extreme fear territory. Total crypto market cap is at $2.23 trillion, down 1.5%. And prediction markets are now pricing in a 36% probability of a Federal Reserve rate hike this month. That number has been the single biggest anchor on crypto prices all summer. A potential rate hike means higher borrowing costs, tighter liquidity, and investors pulling money out of riskier assets. The ugly? International Business Machines, ticker IBM, fell 25% in a single session after warning that second quarter profits would miss expectations. That dragged the Dow down with it. But here's the ugly that matters most for this audience. Crypto initial public offering stocks are in free fall. Gemini Space Station, ticker GEMI, is down 89% from its September 2025 opening price. BitGo Holdings is down 77% from its January 2026 debut. Bullish is down 71% since listing. These are companies that went public promising the future of crypto finance, and they have been absolutely crushed. Here is why that matters for the Clarity Act story we are about to tell you. These stocks tanked in a regulatory vacuum. No clear rules, no institutional framework, no protection for investors. That is exactly the problem this bill is supposed to fix. Here is where the major tokens are sitting right now. Verify these numbers before you act on anything. Prices move. Bitcoin, BTC, around $63,400, down about 2%. Bitcoin's critical support level is $58,000. Below that, analysts are warning of a potential slide toward $50,000. The upside level to watch is $65,000. That is what needs to reclaim for momentum to shift bullish again. Ethereum, ETH, around $1,825, down 2.9%. The reason Ethereum holders need to be watching the Clarity Act closely: staking exchange-traded funds. Right now, the question of whether an ETH staking reward counts as a security or not is still sitting in a legal gray zone. The Clarity Act writes the answer into permanent federal law. That unlocks a completely new category of ETH investment products for institutions. XRP, around $1.09, down 2.9%. This is the one most directly connected to today's story. Standard Chartered projects $4 to $8 billion in new XRP exchange-traded fund inflows in the first year after the Clarity Act passes. To put that in context, XRP ETF have been live since November of 2025 and have pulled in about $1.5 billion total. So we are talking about 3 to 6 times the current inflow base, unlocked almost entirely by institutional money that is currently sitting on the sidelines, waiting for a statute, not just a government memo. Solana, SOL, around $77, down 5.2%. It failed to break above $80 and pulled back. The Phantom Wallet also had reported difficulties this week, which did not help sentiment. But Solana has a spot exchange-traded fund application pending, and the Clarity Act is the thing that clears the legal path for that approval. Stellar Lumens, XLM, outperforming for the second week running while nearly everything else sells off. Watch this one for relative strength. Quick note before the picks. These are names on the radar, not buy recommendations. Do your own research. Here are 5 low-cost stocks worth watching this week. Number 1. SoFi Technologies, ticker SOFI. Fintech platform with direct exposure to both crypto-friendly regulation and the retail investing wave. Speaking of SoFi, open a SoFi active investing account with $25 or more and you get $25 in stock. Link is in the description. Number 2. Coinbase, ticker COIN. This is the clearest direct Clarity Act beneficiary in the stock market. A signed bill unlocks Coinbase's full institutional product suite. Custody, staking, lending, all of it becomes legally defined overnight. This stock moves with legislative momentum. Number 3. Intel, ticker INTC. Semiconductor recovery play. The chip sector bounced 2.5% Tuesday after the inflation beat. Intel is a low-cost way to play that recovery. Number 4. Strategy, ticker MSTR. The company formerly known as MicroStrategy. Volatile, complicated, and down roughly 40% this month. But still the largest corporate Bitcoin holder on Earth with 843,775 Bitcoin on its balance sheet. If regulatory clarity drives Bitcoin higher, this is the leveraged version of that trade. Number 5. Riot Platforms, ticker RIOT. Bitcoin miner with direct upside if the Clarity Act passage drives a Bitcoin price recovery. A rising Bitcoin tide lifts all mining boats. Not financial advice. Do your own research. 5 crypto assets worth watching this week. And notice that every single one of these has a direct connection to what we are about to tell you in the deep dive. Number 1. Bitcoin BTC. The key level is $65,000 on the upside. Reclaim that and the technical picture starts to repair itself. The ETF inflow reversal we just talked about is the first real bullish signal in weeks. Number 2. XRP. The most direct Clarity Act trade in this entire market. If the bill passes, Standard Chartered's $4 to $8 billion inflow projection suggests this token reprices fast and hard. If it fails or gets delayed, the one catalyst that separates XRP from the rest of the altcoin complex slips with it. Number 3. Ethereum ETH. Staking permanence is the unlock here. The Clarity Act gives ETH staking rewards a permanent statutory answer, like that changes what products can be built on top of Ethereum and who can access them. Number 4. Stellar Lumens, XLM. 2 consecutive weeks of relative strength while the market sells off. That is a signal worth paying attention to, especially with Stellar's positioning in cross-border payment infrastructure. Number 5. Solana SOL. Failed the $80 breakout, but the spot ETF filing is still pending. The Clarity Act clears the legal path for that approval. Watch what happens to Solana if the bill moves forward. Not financial advice. Always do your own research before you invest in anything. Let me set the context for why this particular stretch of days matters more than almost anything else we have covered this year. First, the Senate floor vote is targeted for the week of July 20th. That is the expected window, not yet officially confirmed by Senate leadership. The National Defense Authorization Act, the military spending bill, may consume the week of July 13th, which pushes clarity consideration to July 20th at the earliest. From there, you have roughly 2 active Senate weeks before lawmakers leave for the August 7th recess. Second, there is a New York field hearing on July 17th. The House Subcommittee on Digital Assets is taking the Clarity Act to New York for industry testimony. The bill is being framed as the day that United States crypto rules finally arrive. Nothing gets decided there, but it is a momentum-building event 3 days before the Senate targets the floor. Third, Bitcoin ETF inflows just reversed, $221 million in one day. This is the first institutional re-entry signal since the sell-off started. If the Clarity Act passes and institutional money starts moving in earnest, that inflow number could look very small in hindsight. Fourth, the Fed rate hike probability is at 36%. Softer June inflation data pushed that number down slightly, which is actually good for crypto. Every basis point drop in rate hike odds is a tailwind for risk assets. Watch Thursday's jobs data carefully, and fifth, August 7th is the cliff. If the Clarity Act does not pass before lawmakers leave for summer recess, it collides head-on with midterm election season in the fall. Brian Gardner, chief Washington policy strategist at Stifel, wrote that if the Senate fails before the recess, the bill's prospects, his words, would deteriorate materially. Senator Lummis has said the realistic floor for a retry is 2030, so that is the calendar. Now let us actually talk about the bill, the Digital Asset Market Clarity Act, H.R. 3633, the most important piece of crypto legislation ever to make it this far through Congress. Let me start with a plain language explanation because this stuff matters too much to hide behind jargon. Right now, the United States government has 2 main financial regulators. The first is the Securities and Exchange Commission, the SEC. Think of the SEC as the agency that oversees investments. Stocks, bonds, things where you are putting money into a company expecting a return. The second is the Commodity Futures Trading Commission, the CFTC. Think of the CFTC as the agency that oversees raw commodities. Oil, gold, wheat, things with inherent utility and value independent of any central organization. For the past decade, Bitcoin, Ethereum, and XRP have been stuck in a legal no-man's land between those 2 agencies. The SEC kept treating crypto like securities. The CFTC kept saying they should be commodities, and the industry got caught in the middle, like paying lawyers instead of building products. In March of 2026, the SEC and CFTC jointly issued guidance classifying Bitcoin, Ethereum, XRP, and 13 other assets as digital commodities under CFTC oversight. That was enormous. But here is the problem, and this is the part your competitors are not explaining clearly enough. That joint guidance is an administrative interpretation. It is not a law. The next administration, or even the next SEC chair, could reverse it with a single memo. Institutional investors, pension funds, sovereign wealth funds, large asset managers, their legal departments are explicit about this. They will approve products backed by law. They defer products backed by guidance. The Clarity Act exists to convert that guidance into permanent federal statute. Once it is written into law, no future SEC chair can undo it. Congress would have to repeal it. That is the difference between renting legal certainty and owning it. Here's what the bill actually does. 1. It permanently assigns Bitcoin, Ethereum, and XRP to CFTC oversight for spot market trading. The SEC retains anti-fraud authority and jurisdiction over new token fundraising, but the day-to-day regulatory home for the Big Three is the CFTC written into law. 2. It creates a path for tokens to graduate from security status to commodity status as their networks decentralize. A project can start life under SEC oversight and move to CFTC oversight once it meets a maturity test. No single party controls 20% or more of the tokens or voting power. The network is functional and open source, and governance is transparent. 3. It unlocks Ethereum staking exchange-traded funds. The yield question that has been stuck in legal limbo since 2023 gets a permanent statutory answer. Staking rewards are not securities. That changes the product landscape for institutional Ethereum exposure dramatically. 4. It creates a clear approval path for Solana, Avalanche, and Cardano spot exchange-traded funds. Their commodity classifications are currently just administrative guidance. The Clarity Act writes it into law, which gives the SEC a clear legal basis to approve their ETFs. 5. It protects developers. If you write open-source non-custodial code, meaning you are building software but not holding anyone's funds, you are not a regulated financial intermediary. That is a statutory safe harbor that DeFi developers have been waiting for years. Now here is what nobody is saying loudly enough. The merged Senate text and the version that is going to the floor has already dropped the ethics provision that would have barred government officials from profiting off crypto while in office. That provision was one of the main things swing vote Democrats wanted. It is gone. And Senator Lindsey Graham, whose death has been politically invoked to push this bill forward, was not actually a key player in the Clarity Act. He did not serve on the banking committee. He did not cast a vote at the markup. The bill has been led by Senator Tim Scott of South Carolina and Senator Cynthia Lummis of Wyoming. Using his name to build momentum is political theater. The vote math is what actually matters. The math is this. Republicans hold 53 Senate seats. You need 60 votes to clear a filibuster. That means at least 7 Democrats have to cross the aisle. 2 are already on record. Ruben Gallego of Arizona and Angela Also Brooks of Maryland voted for it in committee. They need 5 more. With the ethics provision removed, those 2 swing votes are now conditional again. That is the real story. 3 outcomes. Let me walk you through each one. Outcome 1, it passes. XRP reprices fast. Standard Chartered and JPMorgan both project $4 to $8 billion in new ETF inflows in the first year. Ethereum staking products get unlocked. The entire altcoin ETF pipeline opens. Solana, Avalanche, Cardano all get cleared paths. Institutions enter at scale. This is the scenario the market has been partially pricing in all year. But here's the hidden risk even in the good scenario. Even if this bill gets signed tomorrow, most of the enforceable rules do not arrive until 2027 at the earliest. The CFTC has 180 days to set up registration. The joint SEC and CFTC rulemakings take 360 days after enactment. So the near-term impact is sentiment and ETF flows, not overnight operational change. Outcome 2, it fails or gets pulled from the floor. This is the worst path and the least priced by the market. A failed floor vote does not just delay the bill, it breaks the coalition. Every opponent gets invited to treat the next version as an open negotiation. Senator Lummis called this a rare moment of tri-branch alignment, House passage, Senate committee clearance, White House support, that may not survive a midterm cycle. If it fails, analysts expect Bitcoin to pull back toward the low 60s and XRP to retest below $1. Outcome 3, delayed to after recess, the limbo scenario. The Senate punts to fall, the fall calendar runs straight into midterms, and legislative momentum collapses. Every month of delay is another month of institutional capital sitting on the sidelines, waiting for a statute rather than an agency memo. Galaxy Research puts 2026 passage odds at roughly 50-50 right now. Polymarket has dropped from 74% a month ago to approximately 48% today. This is genuinely a coin flip, which is exactly why you need to understand all 3 scenarios before this week plays out. Before we close, let me leave you with a word. Joshua chapter 24, verse 15. Choose you this day whom you will serve, but as for me and my house, we will serve the Lord. Congress has a choice to make. So do you. The data is in front of you. What you do with it is yours to decide. If you want to trade crypto while all of this plays out, I trust Kraken. One of the most trusted exchanges in the game, the link is in the description. And if you want to get started in stock investing, SoFi Active Investing is giving you $25 in stock when you open an account with $25 or more. Link is in the description. Nothing on this channel is financial advice, ever. Do your own research. Talk to a professional and invest only what you can afford to lose. I am Tony. I will see you in the next one.